We continue to aspire being the leader every day, and now we have the top stories that we're tracking this afternoon, with the fact that the market is slightly off the highs, close to around 12,150, hovering around that range ever since it has opened. So we'll keep an eye out on how this pans out, given the fact it is weekly options expiry. First up, all the top stories. The Dalal Street stays out of the global rally as domestic data disappoints. Key indices slip 0.5% each. Mid-caps too fall in line with frontliners.
Banks sulk with the Nifty Bank down over 0.5%. Yes Bank, however, bucks the trend despite delaying its third quarter results print after the bank says that it is in talks with marquee investors to raise capital.
Result reaction, strong ones coming in from IRCTC and Torrent Power soar on stellar third quarter earnings, while Ashok Leyland slips as margins hit multi-year lows and revenue as well as net profit miss expectations.
A NASSCOM survey indicates 57% of Indian tech CEOs expect the industry to perform similar or somewhat better in the next financial year. The big three of Indian IT say they're not playing the catch-up game anymore as India is spearheading the digital transformation across the world.
City gas distribution companies, they're under pressure. A Credit Suisse note indicates that PNGRB's proposed regulations of an open market access, they could hit the sector's profitability.
All right, well, we've got the fag end of the earnings season, and lots of companies have been declaring numbers in the last couple of hours. Schaeffler India is the stock and the company on our radar right now. If you look at the fourth quarter print, then the weakness has persisted. It's also the last quarter for them because they follow the calendar year to 2019. To discuss the outlook going forward, we have with us Harsha Kadam, CEO of Schaeffler India. Harsha, thank you so much for being with us this afternoon. Great to have you on the show. Now, as I'm looking at the fourth quarter roundup for you, again, revenues are down about 12%, EBITDA is on the lower side. You've managed to more or less maintain margins, though year on year, there is some pressure there as well. We want to understand if it's getting any better. First of all, can you say, when you look at the OEMs that you do business with, is there a bottom in place with respect to auto demand or not?
Thank you, Surbi. Thank you for inviting me for this show. To answer to your question, yes, last year was a very turbulent year, strong headwinds with a weak market demand. However, we were able to be a little more agile than what we used to be. So this was a year, I would say, as a test of agility for Schaeffler India. And we got our act together and we were able to leverage the integration that happened with the three companies, three entities into one, and we addressed various areas of our operations. We began to flex our costs, which helped us in managing to, arrest the further downslide on the profitability. While on the other hand, we also looked at eliminating a lot of waste in the value chain. There was a strong focus on that. And the entire effort was cascaded down to the last man in the organizations. We managed to look at every element of the cost, be it freight, be it energy, even the temporary workmen. We had to balance them out to manage the profitability picture.
Harsha,
this was.
All right, Harsha,
Sorry,
if you could tell us the synergy benefits in terms of quantity, what were they once you merged all the three entities? And revenue mix, 42% I believe comes from industrial, 58% from the auto space. If you could tell us, how that is likely to pan going forward?
Yes, take your first question, that's on the synergy. Having integrated the three entities into one, it has helped us to, work together as one team. And earlier we had, with customers and at business level, different teams working at different levels. And all that has been now done. We have optimized our resources, got our act together. In addition to that, we have also been able to synergize our entire logistics footprint, which has helped us improve the service level in front of the customers. We have been able to even synergize operational activities in the plants, which produce both for the automotive and the industrial place. All in all, we also have now moved all the entire sales team into one office, and that is helping us a lot to bring in a lot better synergy going forward. Coming to your question on the distribution, yes, we have a very well-balanced portfolio between the industrial and the automotive. And while the automotive had faced strong headwinds in terms of weak demand, the industrial space still continued to help Schaeffler India put in a much better performance. Particularly some of the sectors within the industrial space, being the railways, the wind, did exceedingly well. And with a strong presence in these segments, we were able to ride the wave, so to say. What I see going forward is, yes, the distribution would be maintained at the same level as we progress into this year. And going forward, our entire strategy is to keep the balance. We want to be known as a strong automotive and an industrial player in the market.
Okay, is there a number to it? I mean, something that you can kind of give us, in terms of what was the quantum of the synergy benefits, if it can be put in a number, Mr. Kadam?
Well, in terms of percentages, the overall level 1 to 1.5%, we have been able to, leverage on the cost front with the synergy effects coming in. Since it's a host of activities across the organizations, and we had set out with a clear plan in mind on effecting these actions in place so as to leverage the entire synergy effect, and we were able to do that last year. With the market slowdown, the synergizing actually helped us.
Okay, so got it. So 1 to 1.5% at least benefit on cost. I'm going to go back to my original question, and so we're a little short on time. So if you could just give us, an outlook into 2020. In the fourth quarter, your auto business is down almost 22%. What we want to understand is, when does growth return? Do you have any visible green shoots on both parts of the business, the automotive segment as well as industrial? What should we expect in the first quarter of the calendar year, second quarter?
What we saw in the last quarter of 2019 was a spurt-in increase in demand coming from the automotive sector. Actually, the automotive sector did well for us in the last quarter. And this was coming on the backdrop of some more demand coming in from BS4 vehicles, and that helped us to post better numbers in the last quarter, which we will have to wait and watch. Now that the BS6 is going to be kicking in from 1st of April, we will have to see how the market responds to the new cost increases that will be attributed to the vehicles that are coming. Nevertheless, we at Schaeffler, we are ready with the technology shift that has happened because of the shift from BS4 to BS6. We are ready for the change. Also coming on the industrial side, actually industrial was a little weak in demand in the last quarter of 2019. It's almost fell 13% in that quarter, coming on the backdrop of a lot of capex hold coming in from our customers, and that slowed down the industrial growth story. Going into 2020, I do see that we will have a muted growth on the automotive side. However, industrial, we still believe we will be continuing to post strong growth.
Harsha, thanks a lot for stopping by and detailing those numbers for us. We wish you the best for 2020, and let's hope that you achieve all that you've guided for and more. With that, we'll slip into a short break, come back, get you more on the markets as well as stock-specific action. Stay tuned.